Hi everyone and welcome today. I know that we still have a few people joining into this webinar, but we're going to make a start because we do have quite a bit to jam pack into this session today. I'm Rita Yates, the CEO of Insurtech Australia, and we're really pleased to be presenting this event to you in conjunction with RAC and Plug and Play, a window into US InsurTech. RAC is a long-term corporate partner of Insurtech Australia, and we thank them for their support and have done quite a bit of work with Plug and Play Silicon Valley over the last couple of years. For those not familiar with Insurtech Australia, we are a not-for-profit industry body working to build a world-leading insurtech ecosystem right here in Australia. Locally, we're really well connected with insurtech startups and scale-ups, corporates that work right across the insurance value chain, regulators, investors, and innovation hubs. Globally, we're also lucky enough to have very solid connections, and we're a founding member of the Global Insurtech Alliance. Interestingly, it was a pleasant surprise recently to read the Q3 2020 Insurtech report, which looks at global funding into Insurtech. And it was interesting to see that global funding had not only rebounded, but had actually surpassed all previously measured quarters for global Insurtech funding since 2014. And that was for both number of deals as well as total funding volume. Quite an achievement considering we're still in the midst of a pandemic. Still over half of that funding comes from the US, which really remains the epicenter of Insurtech, both investment and innovation at this point. So today we're going to hear about some of the trends coming from the Insurtech scene in the US as part of a fireside chat, and we're also going to hear from 5 Insurtechs from the US who are connected into the Plug and Play program. Before we move into that, though, a very quick update from Insurtech Australia. We welcomed a number of new Insurtech members over the last month, so a welcome to them, including Extrasdra, Tree Manager, USS Global, Aventus and Exceedance. And we're also very pleased to welcome a new corporate partner last month in Blake Oliver, who was our first HR and recruitment partner from an insurance perspective. So we're going to be working with them quite closely on talent-based initiatives for our ecosystem. So it's great to see our community continue to grow. We have a couple of events left, or virtual events, I should say, for the remainder of 2020, including an APAC-focused event in partnership with Insurtech Insights to be held on the 26th of November, followed by a member-only event, which is going to focus on digital marketing for startups and scale-ups. Currently, we're working on our 2021 events calendar, which hopefully will include some face-to-face or a return to some face-to-face events, and we look forward to that. As always, if you have any questions about membership, partnership, events, or anything else that you'd like to connect with Insurtech Australia about, please don't hesitate to reach out and connect with us. So without further ado, I'd like to welcome the moderator for today's event, Kayvon Deldar, who is the Director of FinTech and Insurtech for Plug and Play in Singapore. Over to you, Kayvon.
Thank you so much, Rita, and the Insurtech Australia, as well as the RAC teams for hosting this event. And it was our pleasure as Plug and Play to be able to tap into our startup network to bring in 5 of our favorite startups from our Silicon Valley portfolio to present here today. As Rita mentioned, I'm normally based in Singapore, but I'm actually here in the very cold Bay Area for the rest of the year. So excited to be back near our headquarter office. So the objective of this quick portion is to just give all of our attendees a brief overview of what Plug and Play does, and you'll get to see some of our startups after the fireside chat and their presentations. So Plug and Play's ultimate goal is to help the world progress through innovation and connection, and events like this are one of the many number of events that we do throughout the entire year. There's 2 core business models that we have. We started off as an early stage venture capital firm investing in early stage startups. We've actually invested in all 5 of the startups that we'll be presenting today. And we continue to invest in a number of startups every year. And we also work with over 400 corporations across a number of industries, which I'll be going over later, to help them innovate through startup partnerships. We're headquartered in Silicon Valley, but we've grown quite a global brand. This helps us source startups from all around the world, as well as work closer with business units. So for example, I'm based in Singapore, and allows us to work with global insurance companies that might have a Southeast Asia headquarter there, and to also invest in that region of the world as well. If you notice, we're not yet in Australia, New Zealand yet, but we are definitely looking at coming into that market, perhaps sometimes next year, and especially for broader financial services. And just to do a little bit deeper dive into what we're doing in the Asia Pacific region, which is the closest to Australia by geography, we are headquartered in Singapore, but we also have offices across Japan, China, Indonesia, Thailand, and the Philippines. And we've the same business model. We essentially work with large corporations in that region, as well as we're looking to invest in startups. And these are the industries that we currently work in: fintech, insurtech, mobility, sustainability, travel, and smart cities. So Plug and Play does this is an InsurTech event with InsurTech startups, but we do work in a number of industries. I think the relevance for insurance here is that there are actually a number of technologies that sit in other verticals, such as IoT or health or travel, for example, that have broader implications for data on risk, for customer engagement. And so to be able to pool into all these different resources to find the best startups that are relevant for insurance companies is what we strive to do on an everyday basis. I mentioned in one of our earlier slides that I work with a number of corporate partners across the world. I don't want to spend too much time on this slide, but this will give you a sense, if you can see the logos of the kind of the companies that we work for. And the next slide will be, we work with a number of insurance companies. Insurance is actually the largest vertical we have at Plug and Play globally, where we work at this point. I think it's over 90 insurance companies across the world, across even reinsurance companies, large carriers such as RAC is one of our partners. Have been partners with us for the past 2 years or so, and a number of global brokers, consulting companies, tech firms, etc. So we try to create a all-in-one ecosystem where startups, VCs, and large corporates can connect globally and innovate through partnerships. And very briefly, to talk about some of the ways in which we work with these corporate partners, from the very beginning, it could be exploring and experimenting, just coming to our events and seeing what are the technologies that exist in the world. The second comes to value creation. So once you've been exposed to a number of startups, which ones would create direct short-term or long-term value for your organization. There's a lot of education and culture we can do. We've started even doing like design sprints and design thinking workshops to kind of facilitate this internal innovation process and to open up businesses or organizations to innovation that on a day-to-day basis don't really work with startups. And even beyond startups, we can help with venture capital teams that are looking to source startups or evaluate companies, or meeting corporates across different industries, like a pharmaceutical company working with an insurance company and helping bridge the gap across various industries. And with that, that kind of wraps up my initial plug and play presentation. I'll hand it over to my colleague, Nick Daley from our ventures team to kick off our fireside chat.
Awesome. Thanks, Kevin. Appreciate it. And thanks again to the IAA and RAC teams for involving us here. Today, really happy to welcome for the next 20 minutes, two people that have offered a lot to our ecosystem in Scott Campbell from Amnat, as well as Kate Sampson from Anthemis. Guys, I'd love for you both to turn on video if you haven't already, and perhaps we can get started with some introductions, perhaps from Scott first.
Sure, thanks. I'm Scott Campbell, Chief Client Officer for American National Insurance, based in Galveston, Texas, which is the Houston area, and we have offices in Albany, New York, and Springfield, Missouri, but we're all across the United States. And that is not me, so I did mute my phone, so... but glad to be here. So my group is in charge of client experience, and then we also manage the client and consumer digital platforms for the company. So we've been part of Plug and Play for several years now, and just really appreciate the chance to talk to everybody tonight.
Awesome. Thanks, Scott. Kate, it would be great to get your intro as well.
Hi, everyone. I'm Kate Sampson. I'm a managing director on the investment team at Anthemis. We're a sector-focused venture capital firm focused on fintech and insurtech. We have headquarters in London, New York, and Geneva. I am our lone Anthemis colleague here in the Bay Area. So my background is deep insurance. I was at Marsh & McLennan for a couple of decades. Last role there was leading the Bay Area offices of Marsh. But I spent the last 5 years or so at Lyft. Lyft was one of my first sharing economy clients when I was at Marsh, when they were 15 people. And I went in-house at Lyft, built their internal insurance operations, left about a year and a half ago, and had built close to $1 billion insurance operation in-house there. Joined Anthemis about a year ago in connection with a venture growth fund that I lead for Anthemis.
Fantastic. Thank you very much. I love the lone wolf attitude on the Bay. It's the way to be, right? Awesome. Well, to get started, thought we'd go into some kind of more broader market trends that we're seeing in the US and perhaps beyond. On the face of it, it seems that this year has been a significant one for InsurTech. We've seen 3 or 4 kind of major IPOs: Lemonade, Duck Creek, Root, and others. When we look about this, is this a coming of age for InsurTech? What should we be taking from this? How will this impact maybe the next wave of InsurTech? Or maybe how are you two, as an incumbent, as an investor as well, looking at what's happened this year and taking any lessons from? Kate, maybe we can get started with yourself.
Sure. Well, it's certainly been exciting. So I'll take your question of is it a coming of age? I think it's super exciting, but I still think InsurTech is very much in the early innings. But what has happened now obviously validates the space. There's hype around the space. We can look to fintech and how fintech progressed from as an industry perspective, and expect a lot of the same things to be happening with InsurTech. But it is still early. We still have a lot of folks that are looking closely at the multiples and the valuations for these companies, and you have a lot of folks on the incumbent side scratching their heads a bit on it. But we're going to have some time to see how this evolves. I think what's also interesting about it is it just changes the playing field quite a bit as well, because now we have some InsurTechs that really can, we've talked about incumbent and InsurTech partnerships, and we really believe that that's part of the transformation we'll see in the insurance industry. But the game changes a little bit when you have a number of InsurTechs that have the ability to also be acquirers, to also be on the offensive in this space. So it's going to be an exciting time, but I still do think we are still early.
Yeah, I couldn't agree more. I think I really find that interesting what you said about this almost like reversal in M&A, right? I think we saw like Hippo acquire their carrier and Spinnaker. And that's not typically, I guess, what a lot of people would think would be happening, but it is actually happening behind the scenes, and I'm sure will be the start of many. Scott, I'm curious, your own take, as well as maybe the broader take of how AmNat are looking at this, especially this year. What has been the kind of internal conversations around these IPOs?
Well, I think it's interesting, and I agree with what Kate said. It seems like every year we're talking about a new record for InsurTech, or maybe, well, it's just kind of, maybe it's peaked now and it's going away. But I think if this year has proven anything, it's that it's not going away. It's only going to get bigger. And speaking from inside a carrier, I can tell you that, I think that there's a long runway for that, because I'll tell you, there are no shortage of problems or opportunities that folks can help carriers solve. And as long as that exists, and I think that'll exist as long as any of us are here, there's just a huge opportunity for this space to keep growing. And we're excited about that.
Oh, fantastic. And maybe actually coming from that, maybe we'll stay on you, Scott. Are there any particular, I guess, problems or growth opportunities? You could also see that as maybe like trends or themes that you're most excited about at AmNat. That'd be really interesting to hear.
Sure. I mean, I think that, with a lot of the trends that, especially this year, seems to have accelerated, the velocity is accelerated. So the digital transformation of our business, obviously, and the folks who are listening here are probably like, duh. because that's what you all do and you live that every day. But, remember, we're big old slow insurance companies, so sometimes it takes us a little bit longer. But we've really, that trend has certainly accelerated as more and more people have gotten into digital distribution and whatnot. So I think the trends and the activity around that are certainly something we're keeping an eye on. Concurrent with that are the security risks that are coming up for insurance carriers as we get more digital, as that continues to transform. Obviously, we're all seeing a big ramp up in bad actors. We're seeing a big ramp up in the need to continue to secure that space. So any work that's being done around security is very interesting to us. And then finally, and maybe I'm speaking because I'm in client experience, certainly the partnerships with companies that are helping us improve the experience for clients, because I think in insurance, that's kind of the last frontier for differentiation, because our products are becoming so commoditized. And there's only, you can either try to be the cheapest, which we don't want to do, or you can try to be the best on experience. And that's kind of the last frontier for differentiation. And we found that a lot of the insurtechs that we look at and work with and talk to are so good at that, because you're closer to what's going on out there than maybe the carriers are. So that would be some examples there.
No, I appreciate that. And we'll definitely come back, I think, to that experience as a differentiator a little bit later. I'd love to hear and dig into what that's been like during COVID. Kate, perhaps with the investment lens, what has been kind of most appealing to you? What's been catching your eye in the last few months?
There's a ton of interesting technologies out there. I think I want to stay a little bit with the trend that Scott's kind of talking about, because I think as an investor, it's an interesting trend, or a trend that makes me really optimistic. We hear a lot about the acceleration of innovation and how this pandemic has really accelerated the conversations and the path towards digitization. And I think that it certainly has accelerated the conversations. I think we still need to see what that translates to in terms of investments and partnerships and opportunities. But I do think the interesting trend is, as Scott said, there's no lack of technologies that help solve problems for incumbents, for consumers, for the space in general. And I think that this has really gotten some companies more laser focused on aligning the technology that's out there in the marketplace with specific goals that they have. So it's no longer just kind of a couple of experiments. It's what technologies are out there that are going to help us from a distribution standpoint. What technologies are going to help us distribute these type of new products in a digital way? What products are out there that help us, improve underwriting for this class of business? So I really like the focus, and I think that's an opportunity for a lot of different areas of InsurTech. I think if I think about areas of InsurTech that are interesting to me right now, I think we've seen obviously a lot of focus on the P&C side in this early stage, but the P&C side has been very much on the personal line side. And oh boy, I just think there's a great opportunity on the commercial side. So I'm really interested in some of the innovations and companies that are doing some interesting things that are going to meaningfully impact how commercial business. I may be partial because I came from Lyft and I had lots of mileage data and was incredibly frustrated in the early days of the ability for the insurance marketplace to ingest that data. But now we're sitting in a spot where not only are some of the technologies there to help insurers work with both insurtechs and big corporate insureds, there's also more resources at the incumbents to ingest that data, understand that data. So I really think we're at the early stages of really changing the commercial side of P&C.
That's really interesting. I think we've definitely seen in the last year a huge pickup from our partner base as well, approaching this commercial area. I think especially since kind of Aon's acquisition of CoverWallet, it seems like everyone kind of wants a piece of that pie as such. And I see that as well as ripe for disruption, as well as the life and health side, which if anything, I think has been a bit more interesting this year than P&C, if anything. Perhaps, taking this to another kind of area. So, innovation within the COVID era, the prominent narrative is clearly the digitization of everything. And we've seen a range of responses from corporates, either accelerating conversations, like Kate said, all the way to, some companies pressing pause and holding on their budgets. From your own experiences, how have you seen COVID affect collaboration between carriers and insurtechs? And what would your advice be to carriers, joining us on this call today? Kate, maybe we'll start with you again. I know you mentioned a little bit in that last question there about what you've been hearing from your portfolio companies and other carriers.
Yeah, so I think from a number of portfolio companies, we have some that are in the fintech space that are around mortgages and homeowner type things, and their real estate and home sales have been crazy, and there's obviously a need there for digital offerings. I think, to go to your point on the life and health side, I've been spending some time with some life and health carriers, and just this situation has really brought to focus, how are we going to bring in telemedicine? How are we going to do fluid-free underwriting? What are other data sources that help us understand risk factors for certain conditions? One of my insurance company partners just said, we want to get ahead of the science outpacing our underwriting manuals. What's out there? So I think in the life and health space, there was definitely an acceleration in those areas of the business. And I just think it's caused, we hear this over and over again. We hear the pandemic has accelerated digitization. But we also know everyone really had to look internally at their short-term and their long-term plans, and just kind of reevaluate what their priorities were given the environment. And I think those priorities that can be addressed with technology are going to be addressed with technology.
And Scott, maybe drawing from that, how has Amnat looked at this period, and how have you kind of approached working with insurtechs or startups outside of the classical insurtech bucket?
Sure. Well, I think that when this started, probably like a lot of companies, we didn't know what was going to happen. So we retrenched like a lot of companies did. And so the focus probably got off of innovation and more kind of go into survival mode for a couple of months while you're figuring out what is the impact on the business going to be. I mean, we didn't know, were people going to be massively canceling all their policies, for instance, because they needed to save money, or were they going to, flee to the cheaper companies, or what was going to happen? So, I think that was the downside of this for the innovation piece of it, the insurtech piece of it, was that kind of did put that on pause for us. But I think a couple of good things that did happen for this movement or these trends. Number one, as we keep saying, the acceleration of that digitization. And companies like ours really realized, hey, the stuff that maybe we thought was going to happen in 5 to 7 years may happen in 2 to 3 years now. And so we really need to get off it and get rolling on that. So I think that brought some urgency to it. And I think it also gave us the ability, we obviously, a lot of the startups that we talk to come through plug and play. And the pivot to more virtual was great actually for us, because in the past we'd have, made it out to California 2 to 3 times a year and gone to the events and met with startups, which we love. And I'm looking forward to getting back out there and doing that again. But having to get creative and be virtual, it actually enabled us to talk to and meet with more startups. And maybe even more importantly than that, because it's virtual and there's no limit on the people, whereas we used to bring a couple of people with us every time we'd head out there. Now you can get into all corners of the organization. It's as easy as adding someone to a Zoom call like this, and we can talk to multiple areas. And that's led to some interesting conversations. So while I think that, and Kate mentioned that, the actual making investments and doing things may have slowed down. So for us, that'd be more of the POCs and the pilots that we would do. But I think what you'll see as, hopefully, things start normalizing a little bit after the turn of the year, that you'll start seeing that activity pick up, and that we've got a good pipeline going. It may be a little slower, a little more delayed, but this time has been well spent in doing that and broadening it out in the organization. So that part of it's been good. And
maybe from that, a normal kind of complaint from a lot of startups is how long the sales cycle is to sell to a carrier. Is this going to change due to COVID, or have you seen any structural change at AmNat and how you're approaching, I guess, partnering with startups, or do you think that is something that it's more of a whole industry shift that will take a long time to really, I guess, enact?
I guess I would say you've chosen to work in the InsurTech space, so that means with insurance companies. So I'm a pretty pragmatic realist, and I don't expect that when we come out of this that all of a sudden insurance companies are going to be fast moving, lightning quick. That's not kind of how we're wired, and there's good reason for that, obviously, because the conservatism, the stability of that is obviously a strength that can be a curse as well. I think you'll see some pickup in some areas, and I think you'll probably get more conversations going, and you'll have more of a receptive audience. Now, whether those approval processes go as quick as we'd like them to, hopefully that we'll pick up some lessons for this and pick up some speed. But I think I would be a little Pollyanna if I was saying that we were going to come out of this, we're different, we're changed, we're reformed. I don't know about that, but we'll see.
I'll be a little Pollyanna for the industry then. So back to kind of my first point about the landscape changing a little. When you have companies like Root and Next and Lemonade that have more dollars in the bank, more money in the bank to perhaps acquire other insurtechs to move faster. They by nature are going to move faster. I think they can become more competitive to the incumbents for potential M&A, targets that they want to do. So I do think if we start to see these larger insurtechs start to move quickly, that may start to light the fire in the sense of urgency, see a bit. So that's a one prediction that I have. And I think the same thing potentially holds true on the capacity side. So for the startups on this line and for others who are looking for insurance capacity to partner with to bring products to market, in the early stages of InsurTech, a InsurTech might partner with the first carrier who is receptive to either giving them the pen or giving them some capacity. But I think we have more capacity potentially available that's interested in being part of InsurTech and learning. So I think we'll have some more competition there. So I think my hope is that drives speed, both on capacity and drives kind of resilient capacity arrangements for InsurTech, but also starts to have the incumbents move a bit quicker on either partnerships or potential acquisitions.
Yeah, that's an interesting dynamic, especially I guess is they've initially taken like one line of business each that they've been chipping away at, and now you see this kind of rebundling come back together into a full carrier. I wonder how the incumbents are going to look at that. I don't know, Scott, if you have talked about what happens if I saw, for instance, Lemonade looking to launch a life product. What if they end up launching a similar amount of products to what you guys at AmNat are doing? How are you going to approach that, especially from a customer experience point of view?
Well, and I think that the experience piece is what they're very good at. I'm a bit of a Lemonade skeptic. Not a total skeptic on them. They've obviously done some great things, had a very successful IPO, and I don't know about I think time will tell on the business model. But I think it's something to watch, and I think what they are showing is that there's a market out there, they and others, for people who don't disregard the clients. And at the core of it, I think sometimes insurance carriers, and what has opened us up to disruption, is that lack of focus on that, because it kind of got to be navel gazing and just saying, hey, we've got all this money and we'll just keep, we underwrite and we do this and it just happens. So I think that those companies have been a very good wake-up call for us in seeing the potential of actually providing great experiences and taking care of clients. Now, again, how that proves out business-wise over time, we'll see for those companies. But I agree with Kate. I think there is a lot of great opportunity out there for companies to come in here and do those sort of things.
No, fantastic. And maybe coming to a close here, I'd love to touch on the kind of international element. We opened this about how the US was leading, and all the figures seem to suggest a lot of investments coming here. However, looking more broadly, and I know both of you have had an eye on other regions. And I know, for instance, Kate Anthemis has been making investments in a few different regions like Mexico recently. We'd be curious to hear, how do you guys consider what is going on in other regions? Are you keeping an eye? Are you active in, meeting companies and speaking to incumbents there? And then maybe following from that, what do you look for in maybe building an ecosystem? So when you're looking at a particular investment opportunity, for instance, Kate, in a region you maybe haven't done before, what are you looking for to maybe be comfortable making that investment? And are there any kind of advantages you look for in some markets over others? Okay, I think you're on
Sorry. Someone had to do it. No, we definitely focus predominantly on the insurance side in the U.S. On the growth side in the U.S. and Europe, which we've got folks on the ground there. We speak many languages at Anthemis. I think we have 15 languages spoken by our team, and a deep bench of experts on the portfolio success team that really help us wherever we find an opportunity. But I think that insurance is not limited, obviously, to the US and Europe, and we see super interesting technologies coming out of Israel. I've had one of my life insurance companies is in a conversation with a company in Africa that's doing some interesting things. So it ends up being a small world insurance, and there's a lot of connectivity. So we really don't we want to understand the market, all the same things we would want to understand in the US and in Europe, but just making sure we have all of the right details for the geography we're going into.
Gotcha. And Scott, perhaps on your side, how have you been looking at maybe emerging markets?
Sure. I think we're obviously very US focused, but great ideas, great talent doesn't know any border. So for us, it's just, being open to those ideas wherever they come from. And we certainly keep an eye on that. And we, for us, it really doesn't matter where you're from. We're not just working with US, if that just kind of tends to be where, the convenience factor is. But I would encourage anybody to not be bound by that or worry about those borders or whatnot, because great ideas and great problems solving abilities will find a market for it. And we just encourage you to keep plugging away, keep pushing it.
Yeah, I completely agree, especially with like Kate's point about how small this kind of ecosystem really is. There's so many startups coming from us that maybe come to Australia and then go to another market afterwards, or come from Australia via us somewhere else. I mean, it's a small world, and it's all about just getting into that network, I guess, which is a challenge in itself. But once you're there, it seems like it's a pretty collaborative one.
Yeah, possibly also, Nick, a silver lining from the pandemic, because I think we're all getting exposure to other corners of the world, with more time to do things by Zoom. This is a perfect example of what you're hosting tonight. So thank you.
Totally agree. Totally agree.
Yeah, awesome. Well, both of you, firstly, thank you so much for taking part today. I appreciate you taking the time, especially I know it's late for both of you in the evening. So thank you so much. Appreciate the very honest and very clear answers that you've given us today, and looking forward to hopefully having you guys on again soon. So thank you.
Thanks a lot. It was fun.
Thank you.
Kayvon, over to you.
Great. Thanks, Nick. And thank you to both Kate and Scott for the very enlightening and informative panel. So we have the 5-star presentations, kind of like the main event of today. So each of them will be presenting for 4 minutes, and there will actually be an opportunity for live Q&A. So if you guys have any questions, there is a Q&A button at the bottom of Zoom. Hopefully this is not your first time doing this kind of pitch session, and you guys are very familiar with using the Q&A button. Just click the button, type in your question, and then I will facilitate during the Q&A portion after their 4-minute pitch. So with that, I want to get started with the very first startup, which is MDGO. They are an Israeli-based startup that is developing a real-time access analysis based on advanced AI algorithms and ML models. Relying only on existing vehicle sensors, MDGO generates a real-time first notice of loss report describing passenger injuries and car damages both internally and externally. And here is Itai for their presentation. Itai, if you want to turn on your video.
Hi. Sorry, I can't turn on my video as we have some connection issues here at the moment. I'm being at the northern part of Israel. So I'm sorry for that, for not being polite. Hi, everyone. Good morning. Thanks for making the time and the opportunity to participate. My name is Itai, and for the next 4 minutes, I'm going to introduce you to MDGO, which some of our partners are companies like Allianz in Germany, IDI, and so on, where what we've done is to create a new platform of communicating between policyholders of the auto insurance industry and the carriers themselves during various situations. That means that we try to address a couple of different problems, which one of them is the insurance value that is being worn out during the day-to-day routine when every time an accident doesn't occur, and how can we provide additional services that people do need to and do require on an everyday basis, and how do we mitigate it using contextual technology on one hand. On the other one, this is when car accident is being occurs, and how can we address that and reduce the claim cost per accident. This is by allowing to understand exactly what happened in every one of those situations that I've mentioned. The right service that someone might need at the moment. How can you provide contextual communicating channel? That means that it doesn't matter if a car accident has occurred, his vehicle has been stolen, perhaps he needs a roadside assistance for some reason, and his policy should provide it. You have to be there for the drivers, obviously, and exceed whatever they expect on a very, very commoditized market. And that means that you have to get contextual data, and you have to get the contextual information from each policy in real time. It have to be very accurate and reliable. It's very different to provide someone a service after he was involved in an accident 10 seconds ago, or someone that would like to have service from his carrier and it comes from a vehicle that has been standing still for the past 5 days. And obviously it must be something that is based on mass adoption from the policyholder's point of view. We utilize this smart sticker that you can think about it as some kind of Alexa, only you don't on one hand. On the other hand, perhaps you can think about it of the OnStar for insurance. That means that every type of interaction that a policyholder might require from its carrier is coming from that, whether if it's autonomously in case of an accident, or something that is on demand, such as policyholder that would like to utilize its roadside assistance. So we double tap that sticker. I'm going to show you in a second how it looks like, and it's being used for every type of communication that is needed between the policyholder and the insurance carrier at the auto insurance. But its financial engine, the way its business it works, it actually by reducing the claim cost. Obviously, if you charge $50 per year for that kind of technology, you cannot use it as a mass adoption. So it must fit the requirements of the current business models. It meant to be able to influence the policyholder's decision in case of an accident, due to the fact that when accident does occur, it provides all the data that is needed about what has happened to the vehicle, third-party involvement, and so on and so forth. Obviously, occupant medical condition and the vehicle damages, and to affect the accident claim management. But also when accident does not occur and there is an event such as a claim when the vehicle is being stolen, or when a policyholder would like to shift to a pay per mile. We've seen it with the COVID that many drivers have different issues that they would like to address in the middle of their policy, and so on and so forth. I'm not going to talk too much about the service that the policyholder gets, but just a short example. In case of an accident, which is one of the values that we provide, it's a main value, it's the main financial engine for that kind of technology. So in case of a mild accident, the driver receives SMS because we don't use apps or anything like that, and you will see that. And it allows him to exchange automatically data with the third party and have the carrier with the data of the third parties that has been involved. Whether a tow truck is required, this is something that the algorithm analyzes automatically, and that goes to the relevant body shop that is decided by the carrier itself. And so on the other hand, the data that is being pushed to the carrier automatically is the exact damage that has occurred to the vehicle at the second that it takes place, and that goes to the occupant injuries to different type of accidents, because the car accident is something which has a great variety from minor bump to unfortunately something that involves casualty, and each one of those requires very, very different services. This smart sticker that I've mentioned is an autonomous sticker, its own 4G SIM card, a battery, GPS, accelerometer, and that means that we deliver simplicity. The average amount of time to install that is a little bit less than 5 seconds. It is actually a sticker. It has no app, no external electrical source, absolutely nothing. We don't use any private data. We only know the vehicle make and model. So we don't monitor the constant driving. We don't transmit data. That goes only in two cases. If a car accident has occurred, everything is being done automatically, and the data and the service is being on demand. That goes from if the vehicle has been stolen, roadside assistance that is being provided when the driver double tap that sticker, and so on and so forth. And obviously it must be a contextual SMS, because the service that you would like to provide for a vehicle that has been standing still for the past 5 days is different than someone who was filing a claim 6 days ago and then he double tapped. There's different things that you would like to have from the carrier. The adoption rate of our product is roughly 90%. Not very, the US market not very far away from the Australian researches as well. That's it. That was me, and I thank you very much.
Thank you, Isai. I think we have someone that wanted to ask a question on Q&A, but just wrote hi Isai. But oh, something else I forgot to mention in the startup introductions was that we are doing a live poll. Essentially, if anyone is looking to get connected to any of the startups, just quickly answer the poll. And then afterwards, we'll make all the relevant connections based off of the startups that you've asked to meet with. So we have the poll live right now. And I'm going to open up the Q&A box again. One attendee asked, how does the sticker on the windshield detect the severity of the accident?
Well, we use very complex algorithms and technology. The sensor itself has only a basic accelerometer, but all the technology is implemented in the cloud. We use a technology called virtual sensors. Actually, it's quite complicated, so we can discuss the tech an alternative. Some car manufacturers utilize our technology, such as Volvo, Hyundai, and so on.
Okay, thank you for that. And I believe that's all the Q&A that we have, but thank you so much for your time. All right, we've closed our first poll as well. The next startup that we have presenting is Ushur. We have Simha, their founder and CEO, presenting. And Ushur is a complete solution for intelligent automation designed for high contact industries such as insurance. Ushur engages customers over emails, apps, SMS, and much more using conversational AI and intuitive workflows to understand what people are saying and what to do next. And here's Simha with the presentation.
Everyone, great to see you. It's been a while, and I'm thankful for the opportunity to chat with all of you. My name is Simha Sadasiva. I'm the founder and CEO of Ushur. This has been a 5-year journey for me. We are a company based out of Silicon Valley here, right next to the Plug and Play offices. We also have a team in Bangalore, India. For the first 3 years of my startup journey, we never raised any institutional capital. We bootstrapped the business. Wanted to make sure that what we were building was something that our customers needed and wanted. So in the last 2 years, we've raised a lot of capital. we just announced our Series B about a week and a half ago. We raised a $25 million Series B, bringing our total funding to about $37 million. We work mostly in the financial services and insurance industry. We serve large clients of the likes of Unum, CVS, Colonial Life, Tower in your neck of woods in the New Zealand market. And fundamentally, what we have created is a zero-code AI-powered SaaS platform that takes customer interactions and enables insurers and financial services companies to digitize and automate all of those conversations with your customers. So essentially, the clients that we do business with, they traditionally look to contact center and knowledge workers to service a broad set of stakeholder interactions, whether those stakeholders are your customers, claimants, members, brokers. A lot of manual work that goes into having conversations, servicing, collecting information, and writing it into systems of records or taking actions. So that's the typical scenario. And so we offer intelligent automation as a service platform that enables our clients to have those interactions or conversations using completely automated digital channels of interaction on the front office side. On the back office side, we bring fairly sophisticated process orchestration, workflow management, and automation capabilities to digitize, automate, extract unstructured sources of information that can have structured data and write them into systems of records. So that's a 50,000-foot view of the platform. This is a quick screenshot of what that zero code looks like. So it's basically a drag and drop tool that enables insurers and business teams to quickly orchestrate the specific journey that they are looking to automate. And so there are a wide range of templates that are available in the platform that you can drag and drop and assemble. Let's say you're trying to collect a driver's license, then you just bring that module here, and then it allows the member or your customer to supply you a driver's license by taking a picture of that driver's license using what we call as an invisible app, an app-like experience without expecting your members and users to download an app. It's a secure encrypted channel to collect data or to exchange data with your customers, and build on the fly using that low-code, zero-code orchestration that you saw. So you don't have to go through software development lifecycle to build these experiences. And so our customers basically use that low-code, no-code offering to very quickly create these journeys and complete claims and handle a wide range of journeys. So the typical types of use cases that our platform is brought to bear can be all the way from intake journeys, which is pre-sales, eligibility of insurance, onboarding, enabling your brokers to submit quote requests, automate that entire journey, all the way up to servicing claims, having members use frictionless ways to change simple things like address or provide billing related information through these invisible apps. I'm going to take a couple of quick use cases. This was one financial services company in Europe called Irish Life that was manually triaging over 600,000 emails a year, where there was a team of contact center people looking at those incoming streams of email, opening up the attachments and answering questions that was completely digitized, automated using our AI capable platform. So much so that 80% of the emails don't get opened, don't get touched by a human, completely automated, huge return on investment. Another customer, which is another plug and play partner, is a company called Unum in the benefit space. And so they were manually making phone calls to collect claim-related information with their claimants, $17 per call, and you can all attest to the friction and the cost associated with these types of customer interactions. We they hooked up an API into our platform, into their claim system. And now instead of calling, an automated text message starts a conversation with the claimant where they're able to provide all of the information that they need to, completes that entire journey in a matter of a few minutes. So what makes our platform really powerful is those two key things, the conversational AI piece that you saw, as well as that data extraction capability, our ability to allow unstructured forms of information that can be buried in an email, in a PDF document, in an Excel spreadsheet, or any other source of data that can have this intermixing of structured and unstructured data. By using a low-code, no-code builder, you can orchestrate the specific process, the specific conversation that you want to have with your constituents, all powered by a deep learning engine that understands natural language in conversations as well as in written text. And done through integration, so you basically realize this solution without this being a multi-year journey. Oftentimes, digital transformation is a fairly long, arduous process.
I think we are running out of time for the pitch as we're a bit like three minutes over.
Yep. So what makes this really powerful and easy is that you bolt this on with your existing integrations fairly quickly. That was the last slide.
Okay, thank you. We do have one question in the Q&A. If you could quickly answer, what are the key benefits over existing CRMs like Salesforce?
So CRMs are what we call as systems of records, right? So we work alongside systems of records, whether they are platforms, standard platforms like Salesforce, and we do have an integration and a managed pack that works alongside Salesforce. We are a ecosystem partner with Salesforce, so you can bolt on Ushur alongside your Salesforce platform. But we look at this as the ability to give you quick, nimble, fast, a system of engagement, system of intelligence that allows you to very quickly bring to bear customer experiences that are not possible. Usually, getting anything done on a platform like Salesforce is a fairly expensive, arduous process. And so that's where that low-code, no-code ability brings you a quick, fast implementation.
Sure. All right. Well, thank you so much for your time, Simha. We have 3 more startups that need to present. So I'm going to move on to the next pitch. Thank you. All right. So moving right along, and apologies, I'll try to keep the pitches closer to 4 minutes. The next startup we have is Slice, and we have their co-founder and CEO, Tim, presenting. Slice is a provider of on-demand cloud insurance created to change the insurance experience across a number of markets and insurance products. And here's Tim with the presentation.
That was under 4 minutes. No, thanks for the intro. I think we were, I'm trying to remember, but I think we were cohort 1 plug and play company. You have to check and see. So a lot of fond memories from early days of plug and play in the Valley, and really enjoy going to sessions. We've been in sessions throughout Europe and Southeast Asia. We focus on on-demand insurance for the new economy. We are headquartered in New York City. We have offices in New York, Toronto, Ottawa, Cleveland, London, UK. We operate in US, Canada, UK, and Southeast Asia. We are expanding to Australia and Brazil. Our investors are Horizons Ventures, AXA, Munich Re, Cooperators Insurance in Canada, Sampo Insurance, Grupo Sura in Central South America. JetBlue and Plug and Play is also an investor. Let's see. We live in an on-demand world. You tap on a button and a car shows up. We think that insurance needs to come into that world. We don't think insurance can continue to be tap on a button, go to a website, fill out 5 pages, call a call center, and wait 2 weeks for a bunch of paper to show up. Insurance needs to come into the new world. We think insurance needs to be like Spotify. So insurance needs to be on demand, where you subscribe and you're not covered. You don't have to buy the song. You don't have to buy the album. We also don't think that insurance will ever be a great buying experience. People are excited about buying a car or getting a new home or starting a new business or buying an iPhone, getting a Tesla. But we think that nobody's going to line up at the mall to buy the new version of our home share policy. So we're very big believers in that insurance should protect experiences that people care about. We're live in multiple markets. We do partner with carriers to put on-demand insurance in the markets. Some examples are, I think our first client was Progressive with our home share products, but we're operating in some markets like Southeast Asia with a number of on-demand products that span mobility, housing, small business, travel, accident across the spectrum. As long as it's on demand, which means, as I mentioned, you tap on a button, that's the type of product that we work on. Insurance Cloud Services is our on-demand insurance platform. Some of the differences between our platform and others is it's not, we don't have policy at the center of our model, so we're not policy centric. We've got customer engagement at the center. It is a real-time system, so we react to signals in event. It's dynamic. Our policies are moving around, so they're not static. And rather than people, we respond with algorithms and behavioral science. Our go-to-market strategy, we sit between providers of risk capital and platforms that want to launch new on-demand products or protect participants in their platform by adding additional value to their platforms. One example we're working on was with Denso, where with data coming out of the automobile, we're looking at putting insurance on board, and have been working with them for about a year. In the Australian market, to be specific, we're entering the Australian market through a partnership with Amazon. Amazon's been working with a large insurer in Australia, and they brought us in to work on a new innovative product. So we're in the middle of that process, and we're already in Southeast Asia, but we see this as an opportunity for us to start working in the Australian market, and we've been reaching out to a number of carriers in the market. We do engage through virtual hackathons now, so if there's anybody that's interested in ideating with us virtually around and launching new digital products, please feel free to reach out. Thank you.
Thank you, Tim, and also greatly appreciate that you were just at 4 minutes. So big thank you for that. And it was a pleasure. I know that you guys were part of the first Insurtech cohort ever in Silicon Valley, and you also joined our second cohort in Singapore. So yeah, definitely has been a very active member of our Plug and Play community. So one of the questions we have for you is, and you kind of answered it towards the end, but when you're exploring a new international market like Australia, do you revolve your strategy and products around potential insurance partners, market data, or what are the top factors that you consider?
Yeah, so typically it's around, with digital products, typically you're looking at digital distribution. So it's typically driven by some new form of distribution. Southeast Asia and Australia and those areas are very familiar with the super apps and these digital distribution channels. So a lot in that region is driven by the channel and the
Yeah, I think we lost Tim for a bit. I'll wait a couple of seconds. All right, well, I think if you guys have any questions for Tim in the Q&A, you can just answer via chat. So whenever you ask a question, there's a function to answer via chat. So I think we'll do that for Tim. So moving along to the next startup, we have AirKit, which recently publicly got announced as one of our newest portfolio companies. AirKit is a customer engagement platform to rapidly build and deploy intelligent digital journeys across any channel. And here is Frank for their presentation.
Awesome. Thank you, everybody. Frank here. I am a founding member of the business development team here at AirKit. We're based in Silicon Valley, right in Palo Alto. I work with clients globally across insurance, financial services, and consumer services. So just to fly through this today, we're talking about low code and how it relates and improves customer experience specifically for insurance. And the whole reason we were founded is actually, this team's been working together the last 10 years. We founded a company called Relate IQ, which was an AI-powered CRM that was acquired by Salesforce in 2014. It was at Salesforce that our team, our founders, myself, realized the massive opportunity here to help big companies improve their customer experience. And we're founded by folks like Salesforce, Excel, and Emergence, and we're working with everyone from Fortune 50 insurers to startups. Now, in terms of the problem, customers' expectations are set with the level of Amazon, Uber, DoorDash, Spotify. The reality is, most of the time when we're interacting with our insurance provider, the experience is less so than that, ultimately leading to this huge gap. Now, this gap is really because consumers want this very personalized omni-channel engagement. On the flip side, the businesses have challenges like overwhelmed contact centers or sales teams or engineering teams who can never build enough or fast enough. And that's really where low code comes in. So low code can do a whole number of things, and AirKit helps across acquisition, customer care, and customer retention. But these are some common friction points we help our customers with. Connecting with sales, onboarding people with paper forms and digitizing those, taking payments, handling claims, processing claims, claim status updates, and ultimately, when it comes time to renew, presenting timely offers. And at the end of the day, you're either losing revenue or have increased costs due to this. And these projects, for the most part, can take months, if not quarters or years. Low code decreases these time frames to weeks or months. So what AirKit is we're a low code customer engagement platform. Think of it like a Blue Apron or a Home Chef. Low code is the idea that you have everything you need in a platform to go and build a digital end-to-end customer experience. Ultimately, engineers are being trained on our platform at customers like MetLife and First Republic Bank and Principal to build much faster and to provide better, more digital self-service experiences. So where they build is what you see right here. This is AirKit Studio, drag and drop functionality, where I can create these omni-channel experiences to do everything from claims intake to claims processing to scheduling with sales leads. And really what you build is up to you. The opportunities are endless. And how it really ends up working is AirKit ties into your current systems. We can also be activated by people like agents in your contact center or your phone system to send these digital journeys. Your customer then completes this as opposed to having a conversation with someone on in your contact centers, and then we send this data back to your systems. So what it looks like is, think about being able to increase connect rates with sales, digitize paper forms, process claims with really simple, easy to use apps, or claims intake like FNOL. These are all apps that our customers have built in AirKit, sometimes in a matter of hours, other times days. And if you look at this, if we're trying to increase revenue, we focus on lead routing and digitizing paper forms. MetLife saw a 2x increase in connect rates and a much higher quality of leads. And if we're talking about reducing costs, we're talking about things like IVR deflection to lower cost channels or automating claims intake. So I know that was very quick. If you have ideas on how to improve your customer experience, or if you constantly have this backlog of projects that you can't get through, we'd love to speak with you. And if you want to try your first AirKit experience today, go ahead and hold up your phone, scan that QR code. It'll pop up a payments app, just to give you a quick flavor of what we can do. And that's it. Thank you, everybody.
Thank you, Frank. And if you'd like to get connected to AirKit, you can denote that on the poll. Frank, we have a Q&A question for you. And over all the different functionalities you talked about and some of the clients you they referred to, like MetLife, for example, what are the AirKit functionalities that are the highest used by insurance companies and have perhaps brought them the highest ROI?
Yeah, highest used would be digitizing paper forms. So if you have paper processes that are old and brittle, we can digitize those into TurboTax-like experiences. The second is everyone's wants to lower their CAC right now. So sales engagement. Imagine someone signs up on your website or abandons the sign up flow. We can engage them digitally and proactively with context to drive them back to your team. The last one is IVR deflection. We keep on hearing contact points are up, budgets are down, and teams are being furloughed. So being able to take some of those transactional calls and automate them, like, hey, what's the status of my claim? Press 2, sends me a text message to my claim portal where I can get that information.
Great. Well, thank you so much for your time, Frank, and really enjoyed hearing your presentation.
Thank you.
Awesome. All right. Well, thank you to our audience for keeping with us. We have our final presentation of the day. It is Social Leads. Social Leads is a startup that combines social science, data science, and advanced technologies to see and know your best prospects from your personal and professional networks, and then to deliver actionable insights right to your phone. And here is Larry from the Social Leads team for our final startup presentation today.
Hey everybody, thank you for your time. Looks like I'm not enabled to share just yet.
And your voice is a little bit soft for some reason.
Sorry about that. I'll lean in a little bit closer to my microphone. How's that?
Much better, much better.
Great. And I still need to be given ability to screen share. Host disabled screen sharing still. Oh, there we go. Looks like I can do it.
You're a co-host now, so you should be able to share.
All right, there we go. All right, sorry for that brief delay. Get this presented here. All right, I hope everybody can see my screen. So we are Social Leads. I'm Larry Hitchcock, CEO and co-founder. We are kind of a unique startup based on a little bit of what the Fireside panelists were talking about. We basically started as the winner of a pitch contest held by Northwestern Mutual, the largest life insurer in the US. And as part of that, we got investment, we got co-location, and most importantly, we got a co-development relationship with all of their senior executives. We are an experienced Silicon Valley team with Midwestern roots as well, because NM is based right here in Milwaukee, where I've moved from after 30 years in California back to the Midwest to run it. We were a plug and play participant in our portfolio company, and Social Leads is launched and live with a number of teams across field sales organizations with leading insurers in the US. We pitched at that pitch contest a platform that, using AI and a variety of other advanced technologies, could provide direct insights from an agent's or an advisor's or producer's professional and personal social networks. The AI engine that we built does a number of very key important things. It has a natural language processor that's particularly tuned to the vagaries of social speech. We also measure the personality dimensions of the writer or the poster. We measure the emotional state of the poster, and then we have a variety of machine learning models that help us detect life events that they're talking about. With the idea being that if we can reach out to any one of those people right at the moment these life events are happening, from a sales and engagement point of view, they're much more likely to engage with you. So these are the 12 life events that we currently have. So new job, new home, just married, had a baby, bought a car, paid off a debt, taking care of somebody in your home, death of somebody that you know, estate planning. For our friends at RAC, we launched new pets, relocation, which is very big in today's COVID world, and then retirement. How does it work? We ingest data from a number of sources, but most importantly, and sort of the largest environment that we can pull data in is from Twitter. Simply by following, in this case, this is the SPCA in New South Wales. If I click follow, which I have, we get to absorb the 11,000 or so people that are in the SPCA New South Wales Twitter environment. That's going to get us all of their timelines, everything that they're talking about. That would help me draw in a large number of leads into my system that will then analyze against all of those 12 life events. This is just some data from one of our POCs and pilots that we did last fall. 500 advisors across a field of 50 field offices using Social Leads for just the first 200 days. generated over 8 million leads, over 240,000 of them qualified. We look at a qualified lead as somebody that's got a life event score based on our AI engine of 50% likelihood or more. We do something else. We measure the connective tissue between the seller or producer and the people that are having those life event conversations. And then we also show them who their best referrers are. So we have 17,000 people with strong networks in the network of a producer, and over 100,000 qualified leads just in those referrer networks. This is what the platform looks like. It's been live for almost a year now. We've got pulling in data from quite a number of sources. This is not real person's data, but this is real data that we pulled in. We show, for example, connections in common. We do that both at a professional level and a personal level. We partner with a number of contact data firms to develop and provide you with digital footprints, other kinds of information like emails and phone numbers and methods of connecting. We, of course, know the life events that are being talked about. And then I'll talk a little about this left panel over here. We do also have little ways of tracking whether you've reached out to them and how you've contacted them. Those then feed over to CRMs like Microsoft Dynamics and Salesforce. That little panel on the left, these are everybody in our system, in addition to being a lead or an opportunity that may be talking about one or more life events in their world, also has a network of their own. So we measure both the individual person and the potential they have as a lead and an opportunity, but we also measure the strength of their networks. We have field offices across the US are using this both for recruiting, and then every one of their producers is using this to see who in a network of somebody that they know is also having a lot of life events to develop them as referral engines. So in short, we connect to advisors, professional network and personal network. We map out everything that's being talked about. We provide a social graph map of the landscape between that advisor and the people that they may want to talk to. And then we also show them who would be their most powerful referrers so they can develop that referral or that center of influence relationship with them. I beat the 4 minutes.
Great, thanks, Larry. You did go a bit over, but no worries. We do have one question for you.
Sure.
And of course, for our audience, please denote on the poll whether you'd like to connect with Larry afterwards. Larry, our question for you is, it seems like you have a lot of experience with the agent model that's quite large in the US, but can insurers, perhaps in Australia and other markets, leverage the social leads platform to direct-to-consumer sold products as well?
Yes, absolutely. And in fact, we're doing pilots in South Africa through some of the relationships that we've got with you guys already. And we're talking to folks in Peru and in Japan as well. In Peru and Japan, we're going to be integrating with both Spanish language and Japanese language, natural language processing engines. So there's a little bit of tweaking that we need to do when we're outside of the English language world. But this works perfectly well in Australia. After launching the new pet life event, we started doing some testing in places like Sydney and Perth, and I think I've got something like 1,000 people in a feed list that have talked about getting new puppies and new kittens in the last 6 months. Also, a very hot thing that's going on across America, and I assume in Australia as well, in the time of COVID, while we're all locked in our home offices, easy to start a journey with a new pet in your life.
Sure. All right. Well, thank you so much for your time, Larry. All right. Well, thank you to all of our attendees for attending. And for those of you that are watching virtually, please let us know if you'd like to connect with any of the startups. And for those that answered via the polls, we will connect you afterwards as well. And with that, I'd like to conclude the event. Thanks to Rita joining the Insurtech Australia team and the RAC team for putting this event together. And it's been our pleasure to host and have our startups present. And another big thank you to our Fireside panelists as well. All right. Have a great rest of the day.